Question 1. A registered representative, RR, wishes to participate in a private securities transaction for compensation. Which of the following is required for the RR to proceed? A. The RR must simply notify their employing broker-dealer in writing of the transaction. B. The RR must obtain written approval from their employing broker-dealer, and the firm must record the transaction on its books and records. C. The RR must obtain written approval from their employing broker-dealer, but the transaction does not need to be recorded on the firm's books and records if it is not compensated. D. The RR must only ensure the transaction is conducted through a legitimate third-party escrow service. Answer: B. The RR must obtain written approval from their employing broker-dealer, and the firm must record the transaction on its books and records. When a registered representative wants to engage in a private securities transaction for compensation, often called selling away, FINRA rules strictly require the RR to provide prior written notice to their firm and receive written approval from the firm. Furthermore, if the RR receives compensation for the transaction, the firm must supervise it as if it were its own business and record it on its books and records, ensuring proper oversight and investor protection. For example, if an RR is selling shares of a private company to clients and earning a commission, the firm must actively supervise this activity. Always remember that any compensated securities activity by an RR must be fully transparent to and supervised by their employing broker-dealer. Question 2. Under FINRA rules, a broker-dealer's principal must approve which of the following communications with the public? A. All institutional communications. B. All retail communications. C. All correspondence. D. All internal communications. Answer: B. All retail communications. FINRA Rule 2210 defines different categories of communications with the public, each with specific principal approval requirements. Retail communications, which are distributed or made available to more than 25 retail investors within any 30 calendar day period, must be approved by a qualified principal prior to first use. This ensures that the content is balanced, not misleading, and complies with all regulatory standards before being disseminated to individual investors. For instance, a brochure promoting a new mutual fund to the general public would be considered retail communication and require principal approval. Always remember that retail communications receive the highest scrutiny because they are directed at the broadest audience of individual investors. Question 3. A broker-dealer identifies a transaction that appears suspicious and potentially related to money laundering activities. What is the firm's primary obligation under the Bank Secrecy Act, BSA, regarding this transaction? A. The firm must immediately freeze the client's assets and notify the Securities and Exchange Commission, SEC. B. The firm must file a Suspicious Activity Report, SAR, with the Financial Crimes Enforcement Network, FINCEN. C. The firm must directly inform the client that their transaction has been flagged as suspicious. D. The firm must conduct an internal investigation and resolve the matter before taking any further action. Answer: B. The firm must file a Suspicious Activity Report, SAR, with the Financial Crimes Enforcement Network, FINCEN. Under the Bank Secrecy Act, BSA, and its implementing regulations, broker-dealers are required to establish anti-money laundering, AML, programs to detect and prevent money laundering. If a firm identifies a transaction that raises suspicions of illegal activity, such as structuring transactions to avoid reporting thresholds or involving unusual cash deposits, its primary obligation is to file a Suspicious Activity Report, SAR, with FINCEN within 30 calendar days of detection. It is crucial for the firm to avoid tipping off the client about the SAR filing, as this could compromise the investigation. Think of a SAR as a confidential alarm bell, alerting authorities to potential financial crime. Question 4. A principal is reviewing a broker-dealer's policies and procedures regarding electronic record-keeping. According to SEC Rule 17a-4, how must electronic records be maintained? A. Records must be stored on non-rewritable and non-erasable (WERM) format. B. Records must be stored on physical hard drives only, with daily backups. C. Records can be stored on any accessible format, provided they are backed up weekly. D. Records must be stored on the firm's main server, with no off-site backups permitted. Answer: A. Records must be stored on non-rewritable and non-erasable (WRM) format. SEC Rule 17a-4 outlines specific requirements for broker-dealer record-keeping, particularly for electronic records, to ensure their integrity and accessibility for regulatory examinations. This rule mandates that electronic records must be preserved in a non-rewritable, non-erasable format, often referred to as write once, read many, WRM. This WRM format guarantees that once a record is created, it cannot be altered or deleted, maintaining an accurate audit trail. For example, emails related to customer accounts or trade confirmations must be stored in a way that prevents any post-creation modifications. Remembering WRM is key for electronic record-keeping compliance. Question 5. Which of the following is considered a branch office under FINRA Rule 3110, requiring registration and supervision? A. A location where a registered representative occasionally meets clients by appointment. B. A non-public location where a registered representative conducts firm-related business, such as processing trades, on a regular basis. C. An administrative office that solely processes transactions and has no direct client contact. D. A registered representative's primary residence used for business if the firm advertises it as an office. Answer: B. A non-public location where a registered representative conducts firm-related business, such as processing trades, on a regular basis. FINRA Rule 3110 defines a branch office broadly as any location where a registered representative regularly conducts the business of effecting transactions in, or inducing or attempting to induce the purchase or sale of, any security. While locations where RRs only occasionally meet clients or administrative offices without public contact may qualify for exceptions, a non-public location where an RR regularly processes trades or handles client inquiries on behalf of the firm typically meets the definition and requires registration and proper supervision. This ensures that all significant business locations are subject to regulatory oversight, protecting investors. Just remember, if it looks and acts like an office where securities business is regularly conducted, it's likely a branch. Question 6. A broker-dealer that carries customer accounts is required to maintain a minimum amount of net capital according to which regulatory body's rules? A. The Municipal Securities Rulemaking Board, MSRB. B. The Financial Industry Regulatory Authority, FINRA. C. The Securities and Exchange Commission, SEC. D. The Commodity Futures Trading Commission, CFTC. Answer: C. The Securities and Exchange Commission, SEC. The primary authority for setting minimum net capital requirements for broker-dealers is the Securities and Exchange Commission, SEC, under its Rule 15c3-1, often referred to as the Net Capital Rule. This rule is critical for investor protection, as it ensures that broker-dealers maintain sufficient liquid assets to meet their financial obligations to customers and other creditors. For example, a carrying firm, which holds customer funds and securities, is subject to higher net capital requirements than an introducing firm that does not. Always remember that the SEC's net capital rule is fundamental to the financial stability and solvency of broker-dealers. Question 7. According to FINRA Rule 4513, how long must a broker-dealer retain records of customer complaints? A. For 2 years after the complaint is resolved. B. For 3 years after the complaint is filed. C. For 4 years after the complaint is filed. D. For 6 years after the complaint is filed. Answer: C. For 4 years after the complaint is filed. FINRA Rule 4513, concerning customer complaint retention, dictates that all written customer complaints must be maintained by the broker-dealer for a period of at least 4 years after the date the complaint is filed. This retention period ensures that regulators have access to a comprehensive history of customer grievances, allowing them to monitor patterns of misconduct and assess a firm's handling of such issues. For example, if a client submits a written complaint about excessive trading in their account, the firm must keep that record for 4 years from the date the complaint was received. Think of this as a crucial part of a firm's audit trail for demonstrating its commitment to investor protection and regulatory compliance. Question 8. A registered representative, RR, wishes to accept a part-time job as a real estate agent. Under FINRA rules, what is the RR's primary obligation regarding this outside business activity, OBA? A. The RR must obtain written approval from their employing broker-dealer before engaging in the activity. B. The RR must only notify their employing broker-dealer in writing of the activity. C. The RR must ensure the activity is not securities-related and therefore requires no notification to their firm. D. The RR must only update their Form U-4 to reflect the new employment. Answer: B. The RR must only notify their employing broker-dealer in writing of the activity. Under FINRA Rule 3270 regarding outside business activities, OBAs, a registered representative must provide prior written notice to their employing broker-dealer before engaging in any OBA, even if it is not securities-related. The firm then has the responsibility to determine if the OBA presents any conflicts of interest or requires specific supervision, but formal written approval is generally not required for non-securities-related activities. For instance, if an RR decides to teach night classes or work as a consultant, they must inform their firm in writing. This notification allows the firm to assess and manage potential risks or conflicts arising from the RR's external commitments. Question 9. Which of the following statements is true regarding a broker-dealer's anti-money laundering (AML) program? A. It must be reviewed annually by a senior officer or independent party and approved in writing. B. It is optional for broker-dealers with less than 10 registered representatives. C. It is only required for firms dealing with international clients. D. It must be filed with FinCEN for approval every 2 years. Answer: A. It must be reviewed annually by a senior officer or independent party and approved in writing. FINRA Rule 3310, which governs anti-money laundering (AML) compliance programs, requires broker-dealers to establish and maintain a written AML program reasonably designed to achieve compliance with the Bank Secrecy Act and its regulations. A critical component of this program is that it must be independently tested and reviewed annually by a senior officer or a qualified independent party, and the results of this review must be documented in writing. This annual review ensures the program remains effective and adaptable to evolving money laundering risks. For example, the review might assess the firm's customer identification procedures and suspicious activity reporting mechanisms. Question 10. A registered representative is required to complete the regulatory element of continuing education, CE. How often must this be completed? A. Annually. B. Every 2 years. C. Every 3 years. D. Only once upon initial registration. Answer: B. Every 2 years. The regulatory element is one of the 2 components of the continuing education, CE, program for registered individuals, with the other being the firm element. Registered representatives are required to complete the regulatory element training within 120 days of their second registration anniversary and every 3 years thereafter for as long as they remain registered. This training is designed to keep RRs informed of current industry rules, regulations, and ethical standards, ensuring they remain competent in their roles. For example, if an RR registered in 2023, their first regulatory element would be due in 2025. Always remember that the regulatory element helps ensure RRs stay current with ever-changing regulatory requirements. Question 11. Under FINRA rules, what is the maximum value of a gift that a registered representative may give to a person associated with another member firm without violating the rules on gifts and gratuities? A. $50 per person per year. B. $100 per person per year. C. $250 per person per year. D. $1,000 per person per year. Answer, B. $100 per person per year. FINRA Rule 3220, regarding influencing employees of others, generally prohibits a registered representative or firm from giving gifts or gratuities exceeding $100 per person per year to employees of other member firms or financial institutions if such gifts are in relation to the business of the recipient's employer. This rule aims to prevent undue influence and maintain fair business practices within the industry. For example, sending a holiday gift basket worth $150 to an employee at a brokerage firm with whom you frequently do business would violate this rule. Remember, the $100 limit is an annual aggregate for gifts and gratuities related to business. Question 12. A principal is reviewing a research report prepared by the firm's equity research department. Which of the following is a key requirement for the report under FINRA rules? A. It must be approved by the firm's Chief Financial Officer, CFO, prior to publication. B. It must disclose any conflicts of interest, such as the firm having acted as an underwriter for the recommended security. C. It must include a disclaimer that the firm guarantees the accuracy of the report's projections. D. It must be sent only to institutional clients. Answer, B. It must disclose any conflicts of interest, such as the firm having acted as an underwriter for the recommended security. FINRA Rule 2241, concerning research reports, imposes strict requirements to ensure objectivity and transparency. A crucial aspect is the mandatory disclosure of potential conflicts of interest that could influence the independence of the research analyst or the firm's recommendations. This includes disclosing if the firm has recently acted as an underwriter for the issuer of a recommended security, if the firm owns the recommended security, or if the analyst has a financial interest in the security. These disclosures help investors understand potential biases. For instance, if a firm recently helped a company go public and then issues a buy rating on that company's stock, that underwriting relationship must be clearly stated. Question 13. Which of the following is a responsibility of a broker-dealer's chief executive officer, CEO, concerning the firm's supervisory system? A. The CEO must personally approve every transaction executed by the firm. B. The CEO must submit a written certification to FINRA annually stating that the firm has processes in place to establish, maintain, and review its supervisory system. C. The CEO is responsible only for the firm's financial reporting, not its supervisory system. D. The CEO must review all customer complaints within 24 hours of receipt. Answer, B. The CEO must submit a written certification to FINRA annually stating that the firm has processes in place to establish, maintain, and review its supervisory system. FINRA Rule 3130 requires a broker-dealer's chief executive officer, CEO, or equivalent officer to submit an annual certification to FINRA. This certification attests that the firm has in place processes to establish, maintain, review, test, and modify a system of supervisory policies and procedures reasonably designed to achieve compliance with applicable securities laws and SRO rules. This elevates supervisory accountability to the highest level of firm management. While the CEO doesn't approve every transaction, their certification confirms the integrity of the firm's overall supervisory framework. Question 14. An associated person must complete a fingerprinting requirement under which of the following circumstances? A. Upon registration, if they handle customer funds or securities. B. Only if they have a prior criminal record. C. Annually, as part of the firm element CE. D. When they are promoted to a supervisory role. Answer, A. Upon registration, if they handle customer funds or securities. Under SEC Rule 17F2, broker-dealers are required to have certain associated persons fingerprinted. This requirement primarily applies to those individuals who are involved in the handling of customer funds or securities, or who have access to such assets or to the books and records of the broker-dealer. The fingerprints are submitted to the Attorney General for identification and criminal background checks, serving as an important investor protection measure. For example, a registered representative who handles client checks or stock certificates would be subject to fingerprinting. This helps ensure that individuals with access to sensitive financial information and assets undergo a background check. Question 15. A municipal securities principal must approve which of the following activities for a broker-dealer? A. The public offering of corporate equity securities. B. All communications with the public concerning municipal securities. C. Research reports related to options strategies. D. The opening of new corporate bond trading accounts. Answer: B. All communications with the public concerning municipal securities. The Municipal Securities Rulemaking Board, MSRB, rules require specific oversight for municipal securities activities. A municipal securities principal is responsible for supervising all aspects of a firm's municipal securities business, including the review and approval of all advertisements and other communications with the public concerning municipal securities. This ensures that such communications are fair, balanced, and not misleading, given the unique nature of municipal bonds. For instance, a firm's website content promoting municipal bond investments would need a municipal principal's approval. This specialized principal role highlights the distinct regulatory requirements for municipal securities. Question 16. A broker-dealer must file a suspicious activity report, SAR, with FINCEN within how many days after the firm becomes aware of a suspicious transaction? A. 10 calendar days. B. 20 calendar days. C. 30 calendar days. D. 60 calendar days. Answer: C. 30 calendar days. Under the Bank Secrecy Act, broker-dealers are required to report suspicious transactions by filing a Suspicious Activity Report, SAR. This report must be filed with the Financial Crimes Enforcement Network, FINCEN, within 30 calendar days after the date of detection of facts that may constitute a basis for filing SAR. This timely reporting is crucial for law enforcement efforts to combat money laundering and other financial crimes. For example, if a client makes unusually large cash deposits that don't align with their known financial profile, SAR would need to be filed within this timeframe. Remember, prompt reporting helps regulators and law enforcement investigate potential illicit activities effectively. Question 17. Which of the following best describes the purpose of a broker-dealer's firm element continuing education program? A. To ensure all registered representatives are aware of and comply with federal securities laws. B. To train registered representatives on new products, services, and regulatory changes relevant to their job functions. C. To satisfy the biennial regulatory requirement for all registered persons. D. To educate registered representatives on general market trends and economic outlooks. Answer: B. To train registered representatives on new products, services, and regulatory changes relevant to their job functions. The firm element is a critical component of a broker-dealer's continuing education, CE, program. It requires firms to conduct an annual needs analysis and develop a training plan to educate their registered personnel on subjects relevant to their job functions, including new products, services, regulatory changes, and sales practices. This ensures that training is tailored to the specific business activities of the firm and its associated persons. For example, if a firm begins offering a new complex derivatives product, its firm element training would cover the risks and suitability considerations of that product. Think of the firm element as ongoing, customized professional development provided by the firm. Question 18. A principal reviews a registered representative's customer account and finds evidence of excessive trading that appears inconsistent with the customer's investment objectives and financial situation. This activity is commonly referred to as A. Churning. B. Front-running. C. Painting the tape. D. Free-riding. Answer: A. Churning. Churning refers to the unethical and illegal practice where a broker engages in excessive trading in a customer's account primarily to generate commissions rather than to benefit the customer. When a principal reviews account activity and finds trading volume or frequency that is inconsistent with the customer's objectives, financial situation, and risk tolerance, it's a strong indication of churning. For example, repeatedly buying and selling the same security within a short period without a clear investment rationale for a conservative investor would be a red flag. Principals must supervise accounts to detect and prevent such abuses, which prioritize the broker's gain over the client's best interest. Question 19. A broker-dealer is subject to the provisions of SEC Rule 15C3-3, the Customer Protection Rule. This rule primarily governs a. The handling of customer complaints and disciplinary actions. b. The safeguarding of customer funds and securities. c. The procedures for advertising and communications with the public. d. The requirements for anti-money laundering compliance. Answer: B. The safeguarding of customer funds and securities. SEC Rule 15C3-3, known as the Customer Protection Rule, is a cornerstone of investor protection. It mandates that broker-dealers maintain physical possession or control over customers' fully paid and excess margin securities and protect customer funds by segregating them in a special reserve bank account for the exclusive benefit of customers. This rule minimizes the risk of customer assets being used for the firm's proprietary purposes or being commingled with firm assets. For example, if a customer fully pays for shares of a stock, the broker-dealer must ensure those shares are safely held and identifiable as belonging to the customer, not the firm. This rule provides vital safeguards for customer assets held by a broker-dealer. Question 20. A branch office manager's responsibilities include the supervision of all registered representatives within that branch. This includes a. Reviewing and approving all customer account applications. b. Personally executing all trades for the branch's clients. c. Setting the commission rates for all transactions. d. Ensuring all firm element training modules are completed by staff. Answer: A. Reviewing and approving all customer account applications. A key responsibility of a branch office manager, acting as a principal, is to supervise the activities of registered representatives within their branch. This includes reviewing and approving new customer account applications to ensure that suitability information is gathered, signatures are valid, and the account type is appropriate for the client. This principal approval is a critical step in establishing the customer relationship and ensuring compliance with Know Your Customer, KYC, and suitability rules. For instance, before a new options account is opened, the branch manager must review the client's options experience and financial situation. This proactive supervision is essential for protecting both the firm and its clients. Question 21. Which of the following best defines correspondence under FINRA communications rules? A. Any written or electronic communication distributed to more than 25 retail investors within any 30-day calendar period. B. Any written or electronic communication distributed to 25 or fewer retail investors within any 30-day calendar period. C. Any communication directed to institutional investors only. D. Any internal memo exchanged between firm employees. Answer: B. Any written or electronic communication distributed to 25 or fewer retail investors within any 30-day calendar period. FINRA Rule 2210 categorizes communications with the public, and correspondence specifically refers to any written or electronic communication that is distributed or made available to 25 or fewer retail investors within any 30 calendar day period. Unlike retail communications, which require principal pre-approval, correspondence generally does not require pre-use principal approval but is subject to review and supervision by the firm. For example, an email sent by a registered representative to a handful of individual clients discussing a specific investment idea would be considered correspondence. Understand these definitions because the supervisory requirements vary significantly based on the communication type. Question 22. A broker-dealer is developing a cybersecurity policy. Which of the following is a primary objective of such a policy? A. To prevent all instances of customer data breaches and cyber attacks. B. To ensure the confidentiality, integrity, and availability of sensitive customer and firm data. C. To eliminate the need for physical safeguards at branch offices. D. To transfer all cybersecurity risks to third-party vendors. Answer: B. To ensure the confidentiality, integrity, and availability of sensitive customer and firm data. A robust cybersecurity policy for a broker-dealer aims to protect sensitive customer and firm data from unauthorized access, alteration, or destruction. The core objectives are typically referred to as the CIA triad: confidentiality, preventing unauthorized disclosure; integrity, maintaining data accuracy and completeness; and availability, ensuring systems and data are accessible when needed. For example, encrypting customer account numbers and implementing strong access controls are key components of such a policy. While preventing all breaches is an ideal, the practical goal is to establish comprehensive safeguards to manage and mitigate cyber risks effectively. Question 23. A broker-dealer's sales practices are being reviewed. Which of the following practices is considered a violation of suitability rules? A. Recommending a diversified portfolio of blue-chip stocks to a conservative investor. B. Recommending a highly speculative penny stock to a retired individual with limited financial resources and a low risk tolerance. C. Recommending a municipal bond fund to an investor in a high tax bracket. D. Recommending a mutual fund with a long-term track record to a growth-oriented investor. Answer: B. Recommending a highly speculative penny stock to a retired individual with limited financial resources and a low risk tolerance. Suitability rules, such as FINRA Rule 2111, require broker-dealers and registered representatives to have a reasonable basis to believe that a recommended transaction or investment strategy is suitable for the customer. This involves understanding the customer's investment profile, including their financial situation, investment objectives, and risk tolerance. Recommending a highly speculative penny stock to a retired individual with limited resources and a low risk tolerance would be a clear violation, as it places the customer's capital at undue risk, inconsistent with their profile. Always match the recommendation to the customer's specific needs and willingness to take on risk. Question 24. A firm's written supervisory procedures, WSPs, must address which of the following? A. Only the procedures for handling customer complaints. B. Only the firm's internal financial reporting policies. C. All aspects of the firm's business, including supervision of registered representatives and compliance with securities laws. D. Only the firm's marketing and advertising campaigns. Answer: C. All aspects of the firm's business, including supervision of registered representatives and compliance with securities laws. Under FINRA Rule 3110, supervision, every broker-dealer is required to establish and maintain a system to supervise the activities of its associated persons and to ensure compliance with applicable securities laws, rules, and regulations. This system must include written supervisory procedures, WSPs, that cover all areas of the firm's business. These procedures detail how the firm will oversee everything from customer account opening and trading practices to communications with the public and compliance with anti-money laundering rules. For example, WSPs would describe how new account applications are reviewed and how outside business activities are monitored. These procedures are the bedrock of a firm's compliance framework, ensuring consistent and compliant operations across all business lines. Question 25. Which of the following best describes the taping rule under FINRA Rule 3170? A. A rule requiring all branch office phone calls to be recorded if the firm has a certain percentage of registered representatives with disciplinary history. B. A rule requiring the recording of all written communications between registered representatives and customers. C. A rule requiring firms to record all order entry and execution messages for audit purposes. D. A rule requiring firms to record all outbound telemarketing calls to prospective clients. Answer: A. A rule requiring all branch office phone calls to be recorded if the firm has a certain percentage of registered representatives with disciplinary history. FINRA Rule 3170, often referred to as the taping rule, imposes specific requirements on broker-dealers that have a high percentage of registered persons with disciplinary history. If a certain percentage of a firm's or a branch's registered representatives have been associated with a disciplined firm or individual, the firm may be required to establish and maintain a system for taping all telephone conversations between its registered persons and existing or prospective customers. This rule is designed to enhance supervision in high-risk environments and protect investors from potential sales practice abuses. For instance, a firm with a significant number of RRs hired from previously disciplined firms might trigger this rule.